air conditioning temperature is much higher than the typical office building in Singapore, and that there are fans in the space that they are working in, day out.
So instead of being a glass box, this building is divided into a series of boxes sitting within a big volume. So it's really punctuated to improve cross ventilation, right?
SDE4 proves that indoor occupant thermal comfort does not have to come at the expense of the environment. In fact, the building even produces more energy than it consumes due to its design features, which saw SDE4 achieving net positive status in 2021.
All these things collectively work together to give a better experience to the occupants without creating a negative impact to the environment. To me, that is a green building.
These are things that we try to inculcate into the DNA of the students so that when they go out, it's already in their mindset when they go and do work and etc.
SDE4 embeds sustainable design into the mindset of architects and designers of tomorrow. But how else can we think about reducing emissions in construction?
Now, carbon is in two parts. One is operational carbon. That is the amount of carbon that is released based on the energy that you need to do everything in your day-to-day life. But the second part of carbon is the embodied carbon. That is the amount of emissions that goes into all the process in building something.
It's a lot easier to create a green building when it's still on paper. What we're seeing less of in industry is really the hard-to-tackle parts of the embodied carbon, which is the materials. You know, it's really the carbon that is part of the production of cement and steel. And these materials are ubiquitous. We need them in all of our construction, but actually they're sort of the highest carbon-emitting industries in the world. So they really pose a significant opportunity in terms of decarbonizing because of the size of their carbon emissions.
But what if there is a way to decarbonize the world's most used material?
Forterra is, a materials technology company that is focused on paving a way to zero CO2 cement. We have taken our cues from nature and have developed a new cement chemistry that actually incorporates CO2 into the cement. The benefits of our solution really comes down to the fact that we're working within the existing cement.
Okay, good morning, everybody here in the COP28 here on the ground, as well as those who are tuning in on the live stream. My name is Keith, and I'm Director of Sustainability and Public Affairs at Temasek. For those uninitiated, Temasek is a Singapore-headquartered global investment company. We were founded in 1974. Next year happens to be our 50th anniversary, and we are owned by the Singapore government, but we operate on a purely commercial basis. Our portfolio is just south of US $300 billion as of 31st March 2023. And our portfolio spans really right across the real economy, ranging really from financial services, built environment, agri-food, and a lot of our investments today are centered on sustainability, and what that means in terms of driving decarbonization, not just for our portfolio, but really across the regions and markets in which we operate. And I'm very pleased today to have the pleasure of introducing our panel at Ecosperity Conversations. And the panel is entitled Navigating the Frontiers of the Green Transition, Encouraging Private Sector Investment in Emerging Markets, which is a big topic of interest here at COP, as we've heard over the past couple of days. Without further ado, let me introduce our moderator, Kyung-Ah, who is our Head of ESG Investment Management and Managing Director of Sustainability on stage, and she will introduce our panelists. Kyung-Ah, please.
You can come up to the stage. Yeah. Ooh, this chair is a little awkward situated. Well, good morning. For those of you joining us in person and around the world as well, thank you for tuning in. Let me just start with the framing, and then I'm going to introduce my panelists because we have a very esteemed group today. We're very fortunate to have them. But in case some of the audience members are less familiar with the challenge at hand, I'm going to start with some statistics. So 80% of the global population lives in emerging and developing economies, and that region actually accounts for the vast majority of our global gas emissions, and that is expected to actually grow. But when you juxtapose the fact that 800 million people still lack access to basic electricity, and of course that hinders not only the basic quality of life, but really coming out of poverty, and then another 2.6 billion people lack access to clean cook stoves, which has health, social implications, but also deforestation. We need to be able to really mobilize greater financing flows for the emerging markets and developing economies. And the IEA said that we need 2 trillion per annum of investment flow versus a 400 billion or so of climate investments that is anticipated per year. So we need to actually ramp it up by 5 times. We need a lot of different ingredients to be able to do that. And it's a pleasure to have my panelists with me who is going to help address some of these challenges and illuminate what needs to happen. So to my immediate right is Kitty Bu, who is with GAP, and she's going to explain what that is, but she's a vice president of Asia ex-Japan. To her right is Audra Lowe, who is the CEO of Clifford Capital, and then Helge Muenkel, who is the CSO of DBS. So I'm going to have them introduce the organization, and with a focus on what their remit is, on financing the green transition, and in particular bridging this big gap for emerging markets. So over to you, Kitty, starting with you.
Thank you. I'll give a brief introduction. So GAP is born to creation to bring energy access and also energy prosperity into emerging markets. We primarily work in Asia and also Africa. I'm the Asia VP for GAP, based out of Singapore. And with our mandate, what we also do is we work through a coalition model, working through our a lot of our alliance and partners on initiatives that's purely with the lens of energy transition in the region. Yeah.
Great. And we're going to come back to that word coalition.
So, okay, I'll go next. I'm Audra Lowe. I'm CEO of Clifford Capital. We are an institution that has been set up with support from the Singapore government, and we're here to provide financing for Singapore companies that are looking to invest in overseas markets or when they export to overseas markets. And obviously with the green transition, especially within the infrastructure sector, we see a lot of opportunities for companies to make a difference, including companies from Singapore. So that's going to be a big focus of what we do going forward.
Great. Helge?
Cool, and yeah, thanks for having me. Good morning, everyone. So I'm Helge, CSO of DBS. DBS is a Singapore headquartered bank, very focused on Asia Pacific, and we've developed quite a comprehensive strategy on sustainability, but specifically on climate. We have set science-based decarbonization targets for our lending and financing activities. So what we're going to aim for is really integrating climate considerations into everything that we do and ultimately help our clients to transition to a net zero world by providing the relevant lending and financing support.
And for those of you who haven't been to COP, I will let you know that COP is quite the coalition of different participants, and so logistics can often be a challenge. And so Amit is joining us a little late, but we're very fortunate he has actually made it. And so I'm going to pass it to Amit, who is with Ceres, who's the chief economist and senior advisor for just and inclusive economies. Amit, we were just saying, introduce your organization and how you fit into this remit of facilitating investment into the green transition.
Yes, thank you. And again, apologies for being a little late. As you said, the logistics and things got carried away. But I'm Amit Bando, and I'm the senior economist and advisor on just and inclusive economics. And at Ceres, we are essentially a US-based NGO. We work through a network structure, network of investors, large institutional investors with roughly 57 trillion assets under management, large companies, the Fortune 500 companies, typically US domiciled but working globally, and then policymakers at the federal and state level. So our role is to coordinate and provide the linkages between C-suite action makers. So we like to say that these are the grass tops decision makers that often have large multiplier effects when they take action. And we work with sort of a model that says we look at the best in class, whether it's by industry or geography, use that as a way to then pull from above, but also push action from below. And as we talk further, I'll explain how we do this in different circumstances.
Great. So Kitty, you used the word coalition, and at COP28, coalition, partnerships, you keep hearing a lot of that terminology. So I want to double click into this and ask you each about your coalitions and partnership, and I'm going to start again with you, Kitty, because you benefit from a very large grant from 3 major foundations of philanthropy, but you're working with the MDB's DFIs and ultimately trying to catalyze private capital. Can you explain to us what that really looks like in practice and what you're trying to do to unlock that private capital by priming the pump with your coalition members?
Yeah, thank you for the question. So we are a philanthropist, and we benefit from our 3 very solid anchor funders. They are IKEA Foundation, Rockefeller Foundation, as well as Bezos Earth Fund. So together, we are a size of $1.5 billion. And then the mandate of using this very nimble and very flexible amount of capital is that we really need to, in particular in the region, look at what are the deals and what are the projects when it comes to energy transition that need to happen and yet not happening. So based on the current market conditions, when we are doing the profit seeking, a lot of the things and technologies and projects that needed to really happen to enable that scaling up to cut down emissions and help countries and communities to meet that net zero goal, it's not happening at the speed and the scale that need to happen for us collectively to reach the goal. So what we aim to do is we really look at the gap and what's needed, and then the capital we have, which in the energy transition is a very, very small amount of money. It's not a gold bar, it's not a case of gold, but it's what I call the gold dust. So with that kind of small sprinkle of gold dust, we're looking at what is our value add? Where are the things that we can really kind of sprinkle the philanthropic capital into in order to really enable the deals and also platforms? So having said that, we do investment in individual projects, deals, pilots. We do also invest in platforms, for example. So tomorrow there will be an announcement of an energy accelerator partnership that we're building with ADB, Temasek, and MAS. And on top of that, we realize how important it is to have the right policy environment to enable the investment. So at GAP, we also do walk on 2 legs, as I say. On one leg is making sure our precious capital go to the right places, to blending the money from the MDBs and DFIs, and then really kind of working with GFANs and also all the commercial banks, making sure we're channeling money into the right area. On the other hand, we work with policymakers. We work with people who are trying to come up with the right policy environment in order to enable the financing that needs to happen in the region.
Great. I love that. Gold dust. And one of my favorite new acronyms is the 5 Ps. Partnerships between public and private, philanthropy, and very much in the benefit for people as well, and obviously planet. So Audra, you mentioned you have the support of the Singapore government. You also work quite closely with a number of DFIs and MDBs on some of the de-risking, and you are very commercial in terms of how you're crowding in some of the private sector capital and playing a catalytic role. Can you explain, perhaps bring it down a level and talk about what are examples of things that you're being able to unlock for emerging markets and developing economies and sustainable infra?
Yeah, so absolutely. We were formed precisely with the goal of helping companies raise financing in markets where there are structural gaps. So for example, providing long-dated financing where commercial banks find more difficulty doing so, or in emerging markets where the appetites for these financings may not be as robust. And for us to do that, actually, I come back to this idea of partnership. We can't do that on our own. We too approach our lending from a commercial lens. So in order to do work, especially in frontier markets, we find that it's often very useful to partner with institutions like DFIs. We finance actually the first and now very likely to be for a while the only commercially financed, together with DFIs, debt financing, project financing for a power plant in Myanmar, and that was a first of its kind Pathfinder project. And we wouldn't have been able to do that without all the MDBs coming along. So we had literally all 3 major MDBs, ADB, World Bank, and AIIB in that deal. So I think it's really critical for us to do this. Nearly 70% of our portfolio is actually in the emerging markets. And to do that effectively, it's all about partnerships. Not just MDBs, but also with banks, because when we come in and apply our commercial thinking in financing and structuring deals, we want to bring alongside other commercial banks to work with us. And certainly in the future, we'll also look forward to working with partners like bringing in philanthropic capital as well. Yeah.
And DFIs and MDBs can help de-risk things like FX credit, as well as some of the political risk aspects as well. So it's a very powerful way of partnering. Helge, so you also partner, but I'm going to ask you to talk a bit about how you partner with corporates in the context of some of their supply chain initiatives and really being able to accelerate the green transition. Because in many ways, corporates need to play a bigger role in thinking through the entire value chain in decarbonizing and how that addresses not only the transition agenda and net zero, but also how do you actually do it in a just and inclusive way. So over to you.
Absolutely. But let me maybe first also repeat the context why partnerships are actually so important, right? So we live in the societies we live in today, and we've built them over hundreds of years, and now we want to transform them over 5 or 6 years. What could possibly go wrong, right? A very easy task. So the speed and scale that was already mentioned is indeed quite staggering, and as a consequence, we need to really look at this entire ecosystem. There's government, regulator, private sector, finance sector, all of us really embedded in the community at large. And we all need to go at the same time. And we are a bank. We have a specific role to play in this ecosystem, but we can't play all the roles. And at the risk of repeating this, we have a couple of key challenges that we face in this staggeringly fast transformation that we have to do. One is indeed policy certainty, right? If we want private sector to unlock CapEx and us to finance that CapEx, then we need to know what the direction of travel is, and policymakers can actually help a lot in that. Then there is the risk reward of these projects very often, right? So I actually don't think there is a lack of capital in the world, but we very often have a problem with that. And then in Asia, we also have this issue around the just transition, social equity. How do we take everyone along on the journey? So just again a bit on context setting, because I wanted to make sure that we also understand the role of finance, right? Finance will not by in itself save humanity, but we're going to be a critical part of this entire ecosystem. So let me maybe give you 2 examples of how we work with partners. So one is, we just announced this a few days ago as a program with H&M, probably a global brand that everybody is familiar with. And ultimately, the idea is to decarbonize their supply chain in the countries that we operate in. We are a very Asia-Pacific focused bank, for example, very strong in India. So we ultimately bring together a technical advisor that helps, for example, SMEs that are part of the supply chain to do some relevant analytics around what could be done. And we provide the financing as part of a program we agree with H&M. And we believe that's quite powerful because everybody brings something to the table they're really good at. Another example, and some people call this the mother of all transitions, is indeed the phase out of coal. It's an interesting topic to talk about at COP, but ultimately it's extremely meaningful. Asia accounts for roughly half of global greenhouse gas emissions, and of that, around 1/3 arises from coal. So 1 in 6 tons of emissions in the world actually comes from Asian coal power plants. So we have around 5,000 of them. So how could we support the phase out of coal? And that's a huge focus area. And quite frankly, you're going to need loads of partners. You need partners sitting on this panel providing concessionary capital. You need governments that actually support this. You need regulators, utility regulators, financial regulators, and a whole raft of different providers of capital. So these are things that nobody can single-handedly actually accomplish. And this is why we focus so much on partnerships.
I think those are 2 very good examples of consumer-facing apparel brand and really helping to think about decarbonizing the supply chain, but with, again, just an inclusive transition in mind, but also addressing the hard-to-abate heavy assets in the form of coal transition. And we're going to come back to that in the context of an innovative financial mechanism. But Amit, over to you. Ceres obviously works on policy, but you also have a very powerful set of partnerships in the form of global financial institutions, some of the biggest investors. How are you using that partnership to be able to accelerate the transition, and in particular, thinking through, per your title, the just and inclusive economies?
Good question. And again, I won't repeat a lot of what has been said because, the whole idea of partnership certainly resonates. The idea that no one entity or no one sector can move this along. So a lot of our pressures come from, in fact, those large investors that you talk about. A lot of them are pension funds, the CalPERS in New York and Texas and Florida. So if you look at those, there's a lot of pressure coming from the shareholders, the pensioners themselves saying, we want to invest in XYZ kinds of areas. And this is what translates into our role being where we sort of dissect that. We set benchmarks and we then say, you can't just announce something, you have to actually act on that. And for that, you have to monitor, you have to evaluate, and you have to sort of keep that learning process going. Easier said than done because, as you know, particularly in the United States, but in other countries too, there's some pushback on what exactly do we mean by, you know, environmental or social justice. So one of the things that we tackle through our work is that as we talk about transition, we talk about moving away from coal into renewables, we're talking about communities, we're talking about environmental issues that are impacted in those communities where there is decarbonization, right? You have workers, for example, working in well-paid union jobs. They lose that. Now, you can't just tell them to go work in the renewable sectors because there's skills development. Some have to retire. You have to, you know, allow for that. And then, frankly, moving on to a job situation that's very uncertain, contractual in nature. So that's where we work with the relevant state and even the federal policymakers to address those issues. And in some countries, there is quite an appetite for that. In others, there isn't necessarily an appetite. So as a result, the pressure that comes from the investors have to get translated into the right mix. What we have decided is that we would want to focus on several key sectors such as oil and gas, coal, banking, food and forest, cement and steel, as a way of saying that we could be looking at all sectors equally well, but if we prioritize these carbon-intensive sectors, we're probably going to have more bang for the buck. Again, the idea being that if you have leaders do certain things, banks work with them, then that translates into others following that whole area. And lastly, one more thing is the idea that these partnerships work. Private sector capital gets crowded in because of multilateral development funds, but only works if you have the correct governance structure. Contracts law, arbitration, dispute resolution, these things have to be addressed so that you can have a sustained flow of capital into a country or a region or a sector. This is, again, something that we work with.
Yeah, absolutely. I mean, the policy has to be there, working in concert with technology and scaling it, and obviously capital. It's really the trifecta of policy, technology, and capital working in concert. Audra, did you want to add anything to this? It looked like you were raising your hand. Oh,
yeah, no,
okay,
that's
okay. Yeah, but let me pick up on this managed phase out of coal. And you mentioned, Helge, 5,000 coal units in Asia alone. Yet we know that energy demand is going to grow. I've seen some figures that show 2.5 times growth in energy demand in Asia by 2050. So we got to be able to phase that down while meeting the energy demand. And we also know that the coal fleets are quite young, right? And so you alluded to the fact that there's ways to be able to think through this. And so I want to talk about innovative structuring, right? And there's been a lot of conversation around transition credits. The Monetary Authority for Singapore just mentioned that they will actually offtake high integrity transition credits for managed coal phase-out, which I think is actually quite newsworthy. So let me turn to you, Helge, and I'm also going to ask Kitty to weigh in because you also work with, again, partners on the Coal to Clean Credit Initiative in terms of how can you help bring down some of the economics of young coal fleets to be able to transition that faster, and then also how do we think about the other side of the equation of ramping up renewable energy to avoid leakage? If you could talk a bit more about that and what you all are doing.
Yeah, absolutely. Maybe understanding the basic structure may actually help. So if we want to accelerate the phase out of a coal power plant, what actually happens is that you create a new pool of capital with which you buy out the owners or some of the owners of the existing coal power plants. And you need to assure that the return requirements of this new pot of capital is lower than the return requirements of the existing owners of the coal power plant. And this difference really computationally allows you then to shut down early because you rely on less cash flows. To give you a number, so the MAS actually commissioned a study on the economics and financing needs of these coal power plants. And one of the key revelations was that if we look at an archetypical plant, and they're all very different, so this is really now a rough average, then if you shut down a 1 gigawatt by 5 years, you roughly have a financing gap of 70 million USD. And let's not get too lost on the number because every coal power plant is really dramatically different. But if we have that number in our mind and then know, oh my God, there are quite a lot of them, it actually means that we have a lot of financing needs, right? If we want to phase out 100 of these archetypical coal power plants, we already need 7 billion that actually needs to fill the gap which is created by having less cash flows because you shut down early. So in the deal that was announced yesterday, Sherpon, where GIAP is actually an instrumental partner, and I would love my colleague to chime in on that, because without them it would not have happened. We do not rely on any new forms of carbon credits or transition credits, as we call them. So we were very happy to come up with a structure that worked. But thinking forward, if we have hundreds and hundreds of plants that we want to phase out, we really need to think about new revenue streams. So transition credit is the idea that ultimately we have avoided emissions by shutting down a plant 5, 7, 8 years earlier. So can we actually then issue carbon credits as a specific price, as an additional revenue stream? And the Singapore government yesterday announced, subject to the appropriate guardrails being in place and so on and so forth, that actually they would be willing to purchase these transition credits. The MAS also announced a coalition of the willing, if you will, called Traction. We are also a proud partner of that, where we really bring an ecosystem of different players together, from standard setters, technical advisors, but also banks and others, to ultimately tackle the issue around creating this additional revenue stream. So it's something really very, very new. It's very complex. Many things have to be thought through. What's the right methodology to measure the climate impact and so on and so forth. But we do need it in order to really scale and speed up the phase out of coal.
Kitty, anything you'd add?
I think Jürgen has talked very, very clearly about the rationale and also some of the business models built around to phase out coal. I may actually come in or try to come in from a slightly different angle. Just from my conversations in the region, engaging with a lot of policymakers and regulators, I understand at the end of the day, when we talk about climate, it's about, in this new era, new phase, a new mandate for humanity, we need to start thinking about innovation. Innovation, what does that really mean? It's really, in my mind, innovation of policy, innovation of technology, and innovation of financing. And I would say on top of that, it's also innovation of partnership. So the world is actually watching us, how we are going to innovate in order to really reach the net zero target that we collectively have, facing this very big challenge of humanity. And I believe in Southeast Asia, a lot of the governments I deal with, the markets I travel to, the 8 out of 10 ASEAN countries, they have net zero targets. They have peaking targets. The governments I engage with, they're very dedicated to the longer ultra goal. However, the question is, a recent study done by Convergence showed that we need $9 trillion every year till 2050 in order to enable ASEAN countries to reach that net zero goal. So where does the money come from? And when you face the question of financing, coal is one of the biggest things that we're wondering, where does the money come from? So to go back to the Cheribon deal, I'm very happy, I'm very, very glad to see that there's been an announcement yesterday. And Jürgen is right, we have been instrumental because we are putting concessional capital grants on both the debt side and the equity side to enable this deal. So essentially, we are subsidizing for this deal to happen. And I agree that we need to start innovating around more financing vehicles, different modality to enable deals, transactions happen, not just around coal, but around many other projects in the region. So that would be, in my mind, how to look at this fundamentally. It's about how to channel the right financing and get everybody crowded in and not crowded out in this process. And we as GAP, we pride ourselves as the magnet. Yeah.
That's great. Gold dust and magnet and innovation. And I think it's a great example of certainly partnership, but also how do you stack the various capitals for the different risk returns, including carbon markets? Because unfortunately, not all places around the world have a carbon price on the externality, and many places do have a carbon price, but that's not sufficient today, and hence, how can we actually do that? So thank you for sharing it. Talking about innovation, Audra, you have a unique purview because you originate and underwrite, but also as part of Clifford Capital Holding, there's been quite a number of innovations on leveraging securitization for recycling, as well as doing blended finance for a sister company. If you could talk about both of those innovations for the audience, please.
Yeah, absolutely. Actually, innovation has been very much core to what we do. Even our very own setup, which effectively is almost a PPP with the Singapore government and some private sector participants, including Temasek and DBS. That business model in itself was innovative because it was the first time an institution was set up like this with the mandate of supporting Singapore. From most other countries, these are usually just funded directly by governments as Exim banks or as export credit agencies. Along the way, we've been really trying to innovate through our London activity, doing work in structuring deals in particularly difficult markets. But I think more important than that, especially in the context of transition and the trillions of dollars that we now need to mobilize, we've been also finding ways to try and bring in new sources of capital for infrastructure financing. In Asia, particularly, it's been very challenging because obviously a large part of Asia are made up of developing economies. There's always a lot of concern about regulatory frameworks, whether these are adequate, whether these are consistent, because these are projects that require a very long payback period. So I think we have been working very closely through our Bayfront platform to try and find ways to crowd in longer dated capital. And these are primarily sitting with institutional capital such as pension funds and insurance companies and asset managers. And what we have been able to innovate there is that we created what is what we call it an infrastructure asset-backed security, which is effectively a form of CLO, but backed by a portfolio of good quality project finance loans that was purchased from banks. The idea behind that is that banks, as I mentioned earlier, are not natural holders of long-term loans because the regulatory capital they need to hold against this is extremely high. So we purchase these loans from the banks, we package them into basically CLO vehicles, and then we issue notes, and these are invested into by these insurance companies, asset managers, pension funds, bank treasuries, etc. They've done 4 issuances to date. They've all been extremely well received. In the last issuance, we brought in, we always bring in new investors into this mix. In the last round, we even brought in the UK government in one of the tranches. So I think that, again, is what we think is very instrumental, considering we need to now move not just billions, but trillions. So bringing in all these new sources of capital is super important. The other thing that you talked about, which is more about marginally bankable projects, we were working with Temasek, HSBC, and ADB in early stages and just kind of try to frame this idea of how we can support more marginally bankable projects. In Asia, we see a lot of that. Projects are also smaller. How do we address that? Also specific types of risks that people might not be comfortable with, whether these are not very well structured PPAs or dealing with just smaller sponsors that may not have very good financial muscle to lift these types of projects. And so the idea became Pentagreen, which is now a joint venture between Temasek and HSBC, and we are working with ADB as strategic partners to help sort of make this whole platform happen. And that eventually would roll into a blended financing vehicle, mobilizing additional capital from philanthropies and other concessionary sources, hopefully such as GIAP, in time. And from there, we hope to also address not just the bankable piece, but actually the much larger marginally bankable and even some of what people have thought to date to be unbankable piece of the equation, and which really makes up a lot of projects here in Asia.
So this securitization and how do you actually take things off the balance sheet of banks and put it into the market through institutional investors who really take a longer term perspective and want to do more around infrastructure actually is absolutely critical. And I'm sure many of you who have been following some of the conversations around MDBs, how do you originate and distribute is one of the key, opportunity sets. And then how do you take marginally bankable projects and make them bankable, I think is also an opportunity. And we announced yesterday a partnership with Allied Climate Partners, with IFC and the Monetary Authority of Singapore to be able to do more. And so I'm sure there have been many announcements coming out of COP, and this is sort of the power of the convening and partnerships. And so please stay tuned. Amit, so you again have a pretty unique purview, both from your extensive experience working on clean energy projects to get them going in emerging markets. And then with Ceres, I'm going to ask you a bit of a different question on innovation, where you do actually work on some of the policy frameworks and nudging financial institutions to integrate both the transition and, again, the social inclusion aspect of things. And you mentioned in some of our side conversation the importance of mandates and taxonomies and disclosure. And in some ways, that's also a form of innovation. So can you illuminate a bit more around some of the work that you're doing there and anything you'd add on some of the innovations that we really need to lean into?
Yeah, I'll get into that a little bit. But just I want to pick up a little bit on the fact that, as was mentioned earlier, that in a lot of ways we're subsidizing the initial projects. And I think the goal has to be where there's actually a market draw. And so the innovations that we're looking into is really trying to head us there, which really goes beyond looking at project finance to looking at perhaps program finance. Also to look at the risk-reward ratios and say, okay, if you're going to transition out of coal, where are we going to? Typically, we're going to renewable energy. Well, that means you got to really look into the transmission grid. You got to look into the ability to hasten the permitting process. So there are lots of innovations in those areas that have to be accomplished, and it requires the partnership we're talking about for the financial sector to truly step up. I think MDBs have their own limitations in terms of how much they can innovate because of their structure. So there is, I think, a role here. And so in that context, I'd like to bring in the disclosures and the fact that we are stressing that and actually working with regulators, in the US, it's the SEC. The idea being that if companies, if investors seek disclosures and companies are then, in a way, forced to disclose their emissions, disclose their progress towards targets, and not just talk about a final target, but look at the interim steps that are being taken. And this then feeds well into, one, the demands of consumers as well as investors, but also perhaps even more importantly feeds into the risk-reward calculations, because that's where you can really start in a sort of a backdoor way the carbon pricing issues when in a vast majority of countries we don't see explicit carbon prices. So this is the kind of innovation that we are trying to force, if you may, or bring to the center and mainstream in both the analysis, the assessments. Lately with the interest rates going where they are, a lot of the past assessments, you look at a study that from a year ago, it's going to have data that is in a lot of ways not very useful. So the innovation behind all of these things and integrating is really where we're focusing ourselves.
Now, you touch upon a number of very important points, one of which is data and disclosure. And as an investor, data is absolutely critical, but data to not disclosure for the sake of disclosure, but disclosing data that actually drives the right decision making. And then you also touched upon how do you take it from projects to platforms, right? We got to make these things really replicable because it requires a lot of elbow grease to get things done. So making sure there's a path to scaling and replication, and then obviously enabling environment. And it requires a lot of stitching together the ecosystem on grid and permitting. So thank you for that. I'm going to see right now, we're going to be short on time, but to see if any of the audience members have any questions, for our audience, please.
Interested to hear about the deal to close the coal plant yesterday, it sounds like it didn't need the carbon credits. Can you explain how you structured it, please?
So you're referring to Shiribon 1, which was announced yesterday. So there's a framework agreement that was ultimately announced. So we're talking about a 660 megawatt coal plant. But there are no transition credits involved here at all. So it's indeed concessionary capital from our partners, the Asian Development providing the senior debt financing. So it's really Asian Development Bank plus GIAP. That's really the key driving force behind the financing structure.
Any other questions? Okay. Before I come to the last question, a little bit of a pet peeve of mine, which is we got to have integrity for sure around voluntary carbon markets, certainly in terms of additionality, minimizing leakage and ensuring permanence, etc. But I think sometimes it's skewed too much the other way, where innovation oftentimes does entail risk, and we learn as we go. And I think we need to have enough of a safe space for companies, investors, and NGOs, etc., who really at the forefront are trying to innovate and do the right thing, to be able to bring in mechanisms that really can stack the capital and catalyze private capital flow into mitigation, as well as both avoidance and removal, by the way, because there is a significant time value on carbon. We can't wait. And it's also a mechanism of getting more private capital flow to the global south, to the technologies, but also nature-based solutions that has a lot of social co-benefits. So I just want to put that plug in there for voluntary carbon markets. Okay. Any other questions? Okay. So I'm going to ask one last question, which, since we're at COP and we're still, we have quite a number of days ahead of us. What do you want to get out of COP28, and why are you here? Just very quickly, 1 or 2 sentences, lightning round, please.
For me, I would like to see this philanthropists stepping up and certain segments of philanthropists working together and really move into the blended finance in order to enable more transactions happen and bring the financing mechanism into the global south.
For me, I think being here is really amazing because it brings together so many different people from so many different parts and different types of organization. I think it's sowing seeds of future innovation. So I do hope that this becomes a platform where we get these ideas and to eventually take them into action in short order, simply because everybody is committed to this change.
So I probably have 3 key focus areas. One is really fossil fuels. I mean, we all know we have to reduce our reliance on fossil fuel. The second one is finance. And the third one is carbon markets. And all of these 3 areas are quite instrumental to ourselves. So I've talked a lot about coal phase out, which actually touches upon all these 3 key areas. But yeah, so fossil fuel, let's reduce. Finance, let's increase. Carbon markets, let's make them work. Oh, sorry.
Great. Yeah, I'll sort of second the fossil fuel phase out, and I'd like to see something much more definite there. And in addition to what was said, I think I would also like to see commitments being translated into actual flow of capitals, because I think too often, if you look at the history of the COPs, we have commitments galore, but then you don't really get the action that you expect out of it. So I hope we have a little bit of a change there.
So I'm going to summarize that and borrow somebody else's words and say, you've heard from leaders, this esteemed panelists, what they're doing, and it's ultimately about raising ambition. It's about taking greater action, right? And it is about keeping ourselves accountable and, importantly, alignment, i.e. partnerships. So with that, thank you very much for being with us today and for your leadership.
Thank you.
So this is part of our Ecosperity Conversation series, where we sort of convene conversations around green financing and solutions to really bring about the idea of a cleaner, better, and more resilient world. I think those of you in the audience would see that we've left just some door gifts. There are coasters that are made of recycled plastic as well as wood, so please feel free to pick them up. We do have an Ecosperity conference that happens every year in Singapore. Next year will happen in the middle of April. If you'd like to scan the QR code to find out a little bit more about the conference, and if anybody here is in town in Singapore during that week, please feel free to join us. The team will be in touch and is available to take your questions. Thank you very much.